So if you're a retail Forex trader, you've probably spent, I don't know, countless hours staring at charts, right? But have you ever really stopped to ask yourself one of the most fundamental questions there is?
You know, when you click buy or sell, it feels so immediate. It feels like your order is zipping out into that massive global Forex market. But here's the thing, it almost certainly isn't. And once you understand where it actually goes, it's going to completely change how you look at your broker.
So to really get to the bottom of this, we kind of have to understand the landscape. And look, the FX market is super complex, it's fragmented, so let's just use a simple analogy to make sense of it all.
Okay, so picture this. The entire foreign exchange market is just one gigantic lake. I mean, this thing is vast. It represents the trillions with a T of dollars in currency being swapped every single day.
Now, this lake is absolutely filled with thousands of boats, and these boats represent all the different players in the market. You've got these huge battleships, we're talking the major commercial banks, but you also have hedge funds, giant corporations, and high-frequency trading firms, boats of every single shape and size you can imagine.
And scattered all across this lake are countless islands. These islands are the different trading venues, right? They're the places where all the boats come together to actually trade. And this illustrates a really crucial point about the whole market.
The FX market, it's not one single place. It's not like the New York Stock Exchange where everything happens under one roof. No way. It's a decentralized network of all these different islands or venues. They're all connected, but they're separate. And because of that, there's no one single price for, say, the euro versus the dollar. It's going to be slightly different on every single island.
So we have this lake full of boats and islands. Got it. But listen, not all parts of this lake are created equal. There's this super exclusive members-only area right in the middle. This is the inner circle. It's called the interbank market. It's the VIP section where only the biggest boats, those major banks, are allowed to trade directly with each other, and they're trading in absolutely enormous quantities. This, right here, is the real heart of the global FX market.
Now, access to this inner circle is super restricted. The big banks, they look at the smaller boats and just think they're too risky to deal with directly. So for a medium-sized boat like a hedge fund, to get access, they need a bigger bank to basically vouch for them, to act as a prime broker. It's a very exclusive club.
Okay, so we've mapped out the lake, we've got the boats, we've got the exclusive club in the middle. Now let's get to the most important question of all. Where are you, the individual retail trader, in this whole picture?
Your retail Forex broker, let's be honest, they're one of the tiny boats on this lake. We're talking more like a kayak, maybe even a dinghy. They often have trouble just getting access to the bigger islands themselves. So if your broker is just a tiny boat, where does that leave you?
The truth is, you're not a boat. You're not even in the lake.
You are in an aquarium on your broker's boat. All of your trades, they're not happening out there in the big lake with everyone else. They are happening inside a closed, completely simulated environment that is created and controlled entirely by your broker.
So let's just break down what this actually means. It means when you click buy, your broker is the one selling to you. When you click sell, your broker is the one buying from you. They are your sole counterparty, and your trade never ever actually goes to the market.
Okay, so you're trading in an aquarium. So what? Is that a big deal? Well, yeah. It fundamentally changes the whole nature of your trading, and it introduces a very specific and very serious kind of risk. Let's dig into that. In any trade, you've got a buyer and a seller, right? Those two are known as counterparties. And since you only ever trade with your broker inside their little aquarium, your broker is always, for every single trade, your one and only counterparty. Now, this setup creates a massive inherent conflict of interest. I mean, think about it. Because your broker is your counterparty, you're playing a zero-sum game directly against them. When you win, that profit comes directly out of your broker's pocket. And when you lose, your loss is literally their gain. And this brings us to something called counterparty risk. It's the risk that your broker won't be able, or maybe just won't be willing, to fulfill their end of the bargain. What happens if you hit a massive winning trade and they can't or just won't pay you?
I mean, one analyst put it pretty bluntly. If your broker is unable or unwilling to fulfill its obligations, you are screwed. And the reason is, there's no central exchange guaranteeing that trade. It's just you and them.
So let's just quickly summarize the key takeaways here. You are trading in a closed, simulated market that your broker creates just for you. They are always the other side of your trades, which means your win is their loss. This creates a really big risk, counterparty risk, that they could default on your profits, and your order never, ever reaches the real interbank market. Now look, this doesn't mean all brokers are out to get you, but it does mean that things like trust and regulation and financial stability are way more important than you probably ever realized. So I'll just leave you with this question. Knowing you're not swimming in the great big lake, but in a little aquarium on your broker's boat, how does that change the way you see the risks you're truly taking? Thanks for joining us for this explainer.